Hello guys, this is Smart Trader SA. This is our first YouTube video, free mentorship on smart money concept. Today we are going to learn about mechanical structure of the market, impulsive movement, correction and ranging market. So first we are going to read so that we can understand what is an impulsive move, correction move and a ranging market. Okay guys, let's start. Impulsive move is one whereby the market moves quite strongly or heavily in that direction, covering a great distance in a short period of time. The movement tells you when the imbalance between buyers and sellers is really strong and there is a heavy participation from the institutional side. So this is our impulsive move as explained. Then moving forward to correction. A corrective move during an uptrend is characterized by a move lower or even sideways. Unlike impulsive movement, correction are formed by mixture of bullish and bearish candlesticks where the bodies are relatively small. Yeah guys, I hope you understand the theory part. Now we are moving to the practical side. So let's start first here on my drawing so I can explain to you what's an impulsive move and the correction move. So first guys, let's look at this bullish trend. Okay, so from the low of this candle we are going to look from the low to the high. So from the low of this candle to the high of this candle, the high was taken out by the next candle. Then the second candle, also the high was taken out by the third candle, which makes this an impulsive move because it has covered a large distance in a short period of time. So this is an impulsive move, and on this impulsive move we will identify an imbalance. If there is an imbalance of sellers and buyers between these three candles, so first we are going to mark the high of the first candle to the low of the third candle. So on this move we can see that there was no imbalance on this impulsive movement, as you can see guys. So from the high of the third candle we look to take out the high or the low. So the next candle didn't take out the high or either the low of the third candle, which makes this a ranging market on these two candles. It's a ranging market. Let me write range there so you can understand, as you can see. And then moving forward, the fourth candle is inside the third candle, which makes it a range. So we are going to use the high of the third candle and the low to identify correction or impulsive movement. So the low was taken out by this candle, which makes it the correction of this impulsive movement. So from this high to this low, the low was taken out by this one, and then this candlestick, since it took out the low of this one, it's a correction move. And then from this candle to the next green candle, bull candle, there is no high or low taken out, which makes it another range. As you can see, we have a range between these three candlesticks because the low and the high of the bearish candlesticks was not taken out. So we are still on the correction of this impulsive. So looking on the low of this candle, we can see that this candle took out the low, which makes this low valid. So from here to there, it's a correction of this impulsive movement. And then to confirm if it's an uptrend, we have to take out this high made by the impulsive movement. Then if we take out this high, we know that we are in an uptrend. But if we take out this low, we change the direction of the trend to downtrend. So this candle high was taken out by this bullish candle, which makes it an impulsive move now, because we are going to be taking out this high. So the next candle high was taken out by this bullish candle, and, and then left an imbalance between these three candlesticks, as you can see. So we left an imbalance of buyers and sellers. So the market has to come and fill the imbalance. So let's move forward. Since the imbalance is being created, we took out the high of the impulsive movement to confirm the bullish trend. As you can see, the high of this impulsive movement was taken out, so which means we are still in a bullish movement. And then these three candles, these three bull candles, has also made an imbalance between them from this high to the next low, which makes it a FVG, which is a fair value gap, which also meaning an imbalance between buyers and sellers. So we must either come fill this one or this one by correcting the move downwards. So the market took out the low of this candle to show us it's correcting its impulsive movement. Then after that, it went back straight to the impulsive movement and took out this high of the impulsive movement to show us it's still in the uptrend. I hope guys you understand what we have read to practical. Now we are moving to real market candlesticks so I can explain to you. Okay, we are going to be using this uptrend there from this low to this high. This is what we are going to be using. So first we must mark the high and the low of a candlestick, which is this, as you can see there, the high and the low. Let me zoom so it can become more clear to you. So now we have marked the high and the low of the candlestick to confirm the range. So everything happening within this candlestick, it's a ranging market unless we take out the high or the low. So everything within the high of this candle is the range. So from this low to this high, the high was taken out by this candle. As you can see, this candle took out this low. So from here to this high, it's an impulsive move, as you can see. So the range is between these points that I have marked here. So now from here to there, it's an impulsive move, and then the low of this candle that took out the high of the previous candle was taken out by this bearish candle, and then this bearish candle was taken out both sides, which makes it a straight line, because we have to take out the high of the candle that made an impulsive move to confirm a bullish trend. So everything within this area is still in the range, you see. So the low of this candle was taken out by this bearish candle, and then also this candle is inside this one, confirm our range. So we have a range between these two candles. Yeah, these three candles, we have the range because this low is equal to this low, so we have equal low. So between these three candles we have a range, so we're confirming our low there, as you can see, because this candle's high was taken out by this one, and also it took out the high that made an impulsive move to this high there, to confirm that we are in an uptrend. So now we have confirmed that we are in an uptrend. So since we know we are in an uptrend, we are going to be looking for imbalances to fill, so that we know where to buy our price. So we are looking forward, moving forward, we look at this high and the low. So the high and the low, where's the low and the high. So these three candles, we also have a range again. See, we have the range, and then the high of this candle was taken out by this one, you see. So meaning this, let me show you this red line. This red line is continuing to go up because it's still in a bullish trend to this high, there. Let me delete this and correct it. From there to this low to this high, there is an impulsive movement. Then we look at the next candle that made the high. We look at the candle that made the high of the impulsive movement. The low was taken out there, and then the next candle took the low, and then the next candle also took the low, which makes it a correction movement from there to there. And then we look on our left there, you see, this is our left, looking at the imbalances where price is likely to buy. It's likely to buy at an imbalance of buyers and sellers. You can see this FVG formed there. You see, the FVG is formed between three candles, 1, 2 and 3. The imbalance is formed there, so that's why the price is buying from this point going up, correcting this impulsive movement. As you can see, guys, on your left, this impulsive movement was made, and then it created this imbalance of buyers and sellers. That's why the correction comes back and buy on the FVG and imbalance. I hope you understand, guys. We're marking up our structure, and then yeah, from this low of this candle to the high was taken out by the next candle, and the next candle took out the high to create the high of an impulsive move. Why? We confirm because we took out the high of the previous impulsive move. This means we are still in an uptrend. As you can see, we are still in an uptrend. guys, as you can see, then the low of the candle that took out the high of impulsive move was taken out to correct this impulsive movement, and this we consider it as our correction to this low. Then the low of the candle that created the correction was taken out by the high of the next candle, and the next candle took out the high that took out this high to make this an impulsive move today. As you can see, then to this this one, then its low was taken out there, and then this is our correction. And then let's move, let's go back and see what happened there. This impulsive move created an FVG, as you can see, and then the price bought here to correct this imbalance that was created by this fast moving impulsive move. Then this low taken out by this high, and this high taken out by this, and then this becomes our impulsive movement. Why? Because it took out this impulsive movement high. We are still in an uptrend, as you can see, and then no FVG was formed around this impulsive movement. Then the low that took out the impulsive movement high was taken out right there to correct this movement. So from here to this low, it's a correction move. See, so let me show you something here. So we are within this high, and then this low. And then everything from this high to this low, it's a range. As you can see, it's ranging from here to there. See, it's a range market until we took out this side to confirm, okay, this is an uptrend. As you can see, then this now becomes our impulsive movement from this low to, okay, to this high there. And then on forming this impulsive movement, we have FVGs that need to be filled. As you can see, FVG, and then another FVG. FVG is an imbalance of buyers and sellers, so we need to come back and fill these areas because it's formed in an impulsive movement. Then the market correct it, it comes back to correct. As you can see, it corrects this movement. See, and then took out this FVG to correct it, came back to correct this FVG, then went back impulsively up to close there. Then okay, it went back straight to close, there, and took out our high, that was impulsive movement, which means you are still in an uptrend. See, then this low is a correction move. So if we take out this low now, which means we are in a downtrend, as you can see, the market then corrects this move. See, corrects this move and then corrects this FVG at the same time. So it went straight down, see, straight down to this low. Then this now becomes our impulsive movement. You see, it's no longer a correction movement. Why? Because it took out this low, which was an impulsive movement before. Now the correction changes to what? To the impulsive movement. I hope you understand. For me, fair value gaps need to be filled. Sorry, creating fair value gaps need to be filled. See, FVG, and then FVG, sorry, FVG. Then the market now goes back very slowly. As you can see, it was dropping very fast. So dropping very fast meaning it's a what? It's a impulsive movement. Now the candles formed to fill this FVG is bull and bearish and bullish. So which means this is now our correction move to correct this movement. So from here, okay, first let me show you something there, right there, maybe you have forgotten. So we have a range right there on the high of this candle, to its low. So everything within the high of the candle and the low is a range. As you can see, we have a range there because all these candles are inside the high and the low of this candle. So we have the range there, as you can see, and then the range was taken out by this, which means this now becomes our impulsive move. Why? Because it took out the range, and then we mark this high as an uptrend. Yes, this high as an uptrend. See, this high as an uptrend. Then from there, from this high to the next high, and then to the next high, see, and then to the next, and then to the next high. So from here, from this bottom, from this bottom, this low to this high, it's an impulsive movement. Why? Because we took out the range. This was the range, and then at the same time we are correcting this movement to fill up these FVGs, the imbalances of buyers and sellers. So guys, I hope you understand the example that I have given from here to there. So I don't think it's necessary so we make a long video on this because we are still going to make more videos. So I hope you learned something today about impulsive movement, correction and ranging market. So guys, see you on the next video. Please help me just by subscribing and liking the video so we can make more video. Thank you. This is your boy Smart Trader SA. Have a good one.